And welcome back to Mr. C's Accounting, where we're looking at bonuses. So when do bonuses usually happen for partners? The first occurs in complications when a new partner's investment differs from the capital equity acquired. So their investment amount is different than the capital amount that is acquired. And the second reason occurs when the difference is considered to be a bonus either to the existing partners or the new partner. So bonuses, as you may think of them, where, most bonuses happen to employees when they work above their quota. So they're supposed to sell 5 items and they sell 10. Then they'll get a bonus or extra money as a result of their hard work. With partners, it's different because partners own the company. So these are the two reasons or the two times that bonuses will happen for the partners, and we're going to go through each of them individually. So, in terms of when a bonus will happen to an existing partner, this will happen when a new partner who's coming into the partnership will pay more than the book value of the capital attained. So, if the capital value is $50,000 and he pays $70,000, then there will be a bonus to the existing partners. So the reason why this might happen is if the fair market value of certain partnership aspects, or assets rather, is greater than the net book value. In other words, it's worth more to the outsiders than its current book value inside the partnership. So, for example, we're going back to our 2 dogs accounting group. So, for example, reviewing our previous amounts, if the total capital for 2 dogs accounting is $300,000, $150,000 for both Elway and Atwater, those are the 2 partners, if you recall, and a new guy named Smith acquires a 25% interest of the partnership by making a cash investment of $150,000. What is the entry to admit Smith into the partnership given the bonus situation? So that's the big question that we need to ask. And just by looking at it, you can tell that this amount of money is worth more than the 25%, since we have that 50% is worth that according to the book value. So in terms of recording the entry of a new partner, first we have to determine the total capital of the new partnership. So we have our original total capital, which is $300,000. We now have the new partner's investment that is going to bring it up to $450,000. So that's step 1. Step 2 is determining the new partner's capital credit. In terms of how much capital they're actually getting. So the new total capital of the partnership is $450,000, and the partner is getting a 25% cut of that. In other words, $112,500. Step 3 is to determine the amount of the bonus that is going to the existing partners. We have the capital contribution minus the capital allocation. And that's how we find the amount of the bonus. So, the capital contribution, in other words, the contribution that this new guy, Smith, made, was $150,000, minus the allocation, in other words, what he is getting, which is $112,500. So essentially, you're taking what he's giving, subtracting what he's getting, and that's the bonus. The difference is the bonus. Now bear in mind that this value goes to both partners, so it needs to be split up even further. And that's called allocating the bonus to the existing partners. Now the way this is split up will depend on income ratios. Remember that from a couple weeks ago? So in this example, we're assuming a 50-50 split of income ratios. In this case, we have $37,500 times 50%, which is going to give us $18,750 each. So the entry to record the submission of Smith into the partnership is we increase cash, first of all, because he gave the company $150,000 in cash. And then the corresponding credit entry is the bonus to the two existing partners, and then the credit to Smith's capital because that's what he received. And so this is the addition of a new partner. So the other possibility for a bonus, the bonus to the new partner in this case, not the existing one. This will happen when the new partner's investment in the partnership is less than the capital credit. In other words, he's getting more than he's giving. So this might happen if the partner who's coming in brings enough skills or value to the table that he can justify paying less. You know, if the partnership really wants this person, then they might give them a discount. Also, if the net book value is greater than the fair market value, because the partnership slice that's being sold will be sold at the fair market value. So going back to our two dogs example, we're using the same capital split, $300,000, $150,000 each for Elway and Atwater. So, same guy, Smith, except this time we're making him a highly skilled and technical accountant, and he acquires a 25% interest in the company, or in the partnership, I guess I should say, by making a cash investment of $75,000. Now, whenever a new partner is trying to buy a percentage interest, we have to record that entry. So, what is the entry to admit Smith into the partnership given the bonus situation? Step 1, determine the total capital of the new partnership. So same as before. We started with $300,000. New partner's investment of $75,000 brings the total to $375,000. Step 2, determine the new partner's credit. Same as last time. So $375,000 times whatever percentage cut this partner is getting. In this case, it's $93,750. Step 3, determine the amount of the bonus, same as last time. Capital contribution minus capital allocation. In other words, what he is giving minus what he's getting. So in this case, $75,000, what he's giving, minus $93,750, what he's getting, to give us a negative, which is shown by these brackets here. That's why we have the brackets. Negative $18,750. In other words, the company has just taken a loss, or more specifically, the partners, the existing partners, have taken a loss. So we say allocate the bonus, but in this case, it's a loss. So it's still called a bonus, but it is a loss. So again, assuming a 50-50 split of income ratios, $18,750 times 50% is equal to $9,375 each. So the entry to record the admission of Smith into the partnership is done in the same manner, except this time we still debit cash, and the difference between this bonus or this loss and the last example is that Elway's capital and Atwater's capital are taking a hit. We call it a bonus, but it's of negative value. So you could sort of think of this as Elway and Atwater are transferring this amount of capital into Smith, and that's the form of the bonus that he's getting. So you'll recall, I mean, you guys all know this by now, but the entries, whatever entries we make, have to balance out. So 75,000 plus 9,375 plus 9,375 is equal to 93,750. So this credit entry here is just to signify the arrival of our new partner named Smith, and that's the capital allocation that he's gotten, and this is the bonus here. And that is it. So that's it for bonuses. Short and sweet. See you later.